Okay, good morning, good afternoon, and good evening to all of our viewers. And good evening to you, Brian.
Good evening. How's everything? I guess it's your morning over there. How's everything been, Andrew?
Yeah, it's good. I still haven't had my shot of caffeine yet, but we will get to it after the show. How are you doing?
I'm doing great, doing great. It's been an interesting week. Obviously, downswings galore, pretty much for the last 2 weeks, but it's gotten pretty aggressive here just in the past, what is it, 3 to 5 days or so. So
Uh,
I've got some queued up metrics that we can discuss today, and
uh,
I'm kind of interested in what you've seen in the markets as well. What's been going on
yeah,
in terms of equities tracker?
yeah. Look, it's definitely been interesting in the last, as you said, what 3 to 5 days,
Yeah.
and especially so in the last, I think, 12 hours, where Bitcoin, or in the last 2 hours when Bitcoin dipped below 20. I think when it even hit 21. Um, so yeah, look, I'm very interested to see what the on-chain metrics are showing. So welcome to everyone. Welcome to the show. Today is March the 9th, 2023. We have with us, as usual, our very special guest, Brian Quinlivan from Sentiment. A very big and warm welcome to you, Brian.
Yeah.
And
Great to be
we
here.
will get you to introduce yourself later and talk a little bit more about, who Sentiment and what Sentiment does, who Sentiment is. Uh, for those of you tuning in, don't forget to share, like, and subscribe. If you're on YouTube, look, just click on the bell icon and choose all, so that you can be notified every time we come on live. If you have friends or family who are interested in the topic, in this topic, of crypto and on-chain metrics, do tune in. We're on every second Tuesday of the month. Thursday, sorry, every second Thursday of the month. And also, we have, yeah, look, the markets have been really interesting. So I'm just gonna pass it on to you, Brian, and over to you.
Great, Andy. Yeah. So I'll share my screen here and go over a few things that we've been seeing. Let me know if you can see this okay. Andy, how does it look?
Yep, I can see it looking great.
Awesome. So this is the last 30 days since more or less we last spoke. And you can see that it's mostly been a down swing ever since early February. Bitcoin down 5%, Ethereum down 5%. We have a few exceptions, Hex up 47%, Maker up 28, Stacks has doubled in market cap, Neo up 20, Immutable X up 8. But you can see the vast majority here, it looks as though most are down multiple double digits at least. Cardano minus 17%, Shiba Inu minus 22, Litecoin minus 14, Solana minus 18, Aptos minus 30, Phantom minus 32, Decentraland minus 23. Tons and tons of huge drops. Frax looks like the second biggest next to Phantom at minus 31%. And these are all just the top 100 market cap assets. Of course, there are thousands of others that are at least 90 to 95% of them are down right now over the past 30 days. So the question is why, right? The correlation that we're kind of seeing is the consistent equities and crypto correlation. And we can look at it now here. This is just the last 6 months. Let's zoom into just the last month, make it a little more precise. And you can see it's actually gold and the S&P kind of swinging in tandem at the moment. And Bitcoin and Ethereum kind of had their moment in the sun here in mid-February, launching ahead of the S&P before falling back and eventually kind of clicking down right back to where it started at the beginning of March. And then interestingly, the S&P took a bit of a jump while Bitcoin and Ethereum have just stayed flat and gone down. Uh, and the obvious thing to look at is whales here. And if we open up our whale template, Oh, last 6 months here, get a little perspective. You can see right around the 23rd of January is when whales peaked. This is the percentage of the entire Bitcoin supply held by 10 to 10,000 Bitcoin wallets, which was sitting at 67.3. And look at how it just dropped off a cliff over the next few days and actually bottomed here on March 3rd, going down to 66.7%. About a little under a 0.6% drop of all of Bitcoin supply, which is tens, I think maybe even hundreds of millions of dollars. Um, so, with that said, it wasn't a surprise to see that there was an inevitable drop off that came. Um, and, as far as some redeeming things out there, buying power is still going up. Tether, the percentage held of $100,000 to $10 million wallets continues to go up, sitting at about 34.7%. BUSD is going up, sitting at about 5.96% now. But look at what USDC did right maybe 2 weeks after Bitcoin started trailing. The amount of USDC held by whales just fell off an absolute cliff here before bottoming. It was at what 40.2%, went all the way down to 35.3%. So that's a very unusual drop and basically just gave up all the ground from the accumulation that was going on here between late October and mid to late November. So, my opinion, Andy, is this is kind of continuing to be the overwhelming indicator to keep an eye on and predict where prices will head next.
So Brian, how can we interpret that data? Because you see whales somewhat dumping, well, not really dumping, but kind of reducing their Bitcoin holdings, and then you see them at the same time also reducing their holdings of USDC. How
Yeah,
can
I mean,
we interpret that?
I would interpret it as money actually being converted into fiat and being taken out of crypto, which is not what you want to see.
No.
It's kind of, I wouldn't necessarily say that stable coins are being taken out. I think that a lot of USDC is just moving into Tether and BUSD right now. But
Okay.
still, I think that mathematically, there's a little more overall stable coins being taken out than being put back in based on the severity of this slope. Um,
Yep.
that being said, there is some optimistic news over the past 5 days. Bitcoin has recovered. If I actually zoom in on the amount that's been accumulated here, we'll make a separate line called the absolute line.
Hmm.
Since March 3rd up until now, 25,006 Bitcoin have been accumulated back by these sharks and whales. But if we go back to January 23rd, when prices were peaking for the first time, about 53,000 Bitcoin were dropped. So there's two ways of looking at it. The third way, we could even say, since November 21st, they've still accumulated a bit. So that's
Mm.
not the worst thing in the world. Um, but it's not quite as good if you look at like the percentage of the supply, the green line. It's kind of a more gradual slope. So,
Yep.
not the worst news, but considering it's only gone up this much in terms of supply, percentage of supply held, whereas, prices have gone like this, we'd like to see a little more support from whales to catch up with what prices are doing.
Yep. Definitely. Definitely. Thanks for that.
Yeah, of course. So there's quite a bit of recent stories to look at too. Take a look at this. This is the positive versus negative sentiment. And we saw a massive, massive spike here all of a sudden on March 5th. And I think this might have been related to interest rate hike worries and Jerome Powell talking about potentially moving interest rates up by another 0.5%, which now there's something like a 35 to 36% chance, predictive wise, that this is going to happen, according to algorithms out there. And that has caused a lot of fear in the markets. It hasn't necessarily, the way it normally would, cause prices to bounce. Normally, if we see a big negative spike like this, prices have a positive impact right after. And if it's a big positive spike like this, prices tend to have a negative impact afterwards. But this seems to have to do with the actual state of equities, and the same fear marker happened on the equities side. Therefore, as long as crypto and equities are connected, crypto is kind of going to be taken down along with equities right now. So this was one of the biggest anomalies that we've ever seen as far as negative sentiment. It was very sudden.
Yeah, that's a pretty sharp spike there, isn't it?
Oh yeah.
Yeah. You know, I guess there's also been the recent um where SEC went went after Paxos for issuing the BUSD, and that was an interesting event as well, because I guess the market can interpret whether or not that's that's the SEC going after all stable coins, but so far they've only gone after Paxos.
Yeah, I mean, we started hearing about it in mid-February, I believe, and we
Hmm.
saw this BUSD line, make it a little bigger. BUSD line really took a tumble, going all the way down to its lowest whale supply held since mid-November. So there was a lot of fear, but that fear seems to have started to recover, and I, it's still ongoing. But I think those who believe that BUSD will get through this are in BUSD, and they're here to stay unless news turns for the worst.
Yeah, no, that's an interesting chart to see, because I I remember reaching out to you when that news came about, and I think you shared that you did some analysis on that as well. So, but yeah, so for all those of you who are holding on to stable coin and they happen to be BUSD, from the look of this chart, it looks like the whales and and the, I guess, the sharks, um they're kind of reaccumulating BUSD back to potentially previous levels. Yeah. So as you said, maybe confidence levels are coming back.
Yeah, it does seem that way. This is pretty typical where there's an initial announcement of an asset potentially getting sued. Everyone flocks out of that asset, and then it turns out to be less of a big deal, or at least an ongoing debate rather than just a definitive doom and gloom, news story that everyone runs away from.
Yep. Yep. I personally still don't see how or why it could be interpreted as a uh, uh, or why they went after BUSD and not, the other stable coins like USDC, and the likes of it.
Yeah, it does seem odd. I have heard that they are going after Binance as a whole, as an exchange, for being like a securities distributor of some type, but uh, BUSD seemed to at least be the original target and still
Yeah,
has the most spotlight on them.
yeah, yeah. Cool. Thanks, Brian.
Yeah. And just as an FYI, Andy, I'm getting a little bit of a cutting in and out on your headphones. I'm not sure if it's possible,
Oh,
but maybe you could turn them off and on and see if that might resolve something.
yeah, sure. How's this? Can you hear me better?
Still the same thing.
Still the same. Okay.
And it's possible it's on my end. Maybe you can ask your admin, but I can just continue to share a few stories in the meantime. And, not a big deal. I can still hear most of what you say.
Cool. I'll maybe I'll keep quiet for a little while. I'll let you share anyway.
Yeah, no problem. So we had here earlier today an update on our MVRV model that shows kind of the combined short, medium, and long-term average trading returns for you know for various assets. These are mostly assets that are on Binance, and you can see that just about every one of them are in the opportunity zone now because short, mid, and long-term traders are all down money in these assets. When that happens, we have an algorithm that shows how close it is to this dashed line here. If it gets above the dashed line, this is a definitive top 5% opportunity zone mathematically. And we can see a few different assets in there. I think I see DYDX being one, hash flow being one, and mask being one, just to name a few. But you can see that almost all of them are either at or near this opportunity zone, and they're in the positive territory already, which means that anything here above the just zero line is in a better than average spot where an addition to your position could be justified, or opening a new position could be justified. In the meantime, we only have a few scarce assets that are actually in a danger zone right now, or at least in a worse state than average in terms of adding to your position. None are actually in the official danger zone, which would be below this dash line. So that's an interesting perspective to keep an eye on, because obviously things are down over the 30-day span, and especially down in the more short-term span, the 1 week time frame. So if we looked at just 7 days, look at these crazy returns. They're almost worse than, I think many are worse than the 30-day time frame. Hex back down 22%, TMG down 29%, Blockstacks 40%, Phantom 23%, the Graph 22%, Frax 27%, just to name a few. So that gives you an idea of why this MVRV model is showing such a negative trading return average, thus creating opportunity zones for most assets in crypto at the moment. So that's something to keep in mind. Of course, it's not investment advice. And even as we say in the tweet, prices can, of course, still fall further. But this is the most that crypto assets have been in opportunity zones since the very beginning of the year, right before prices started going nuts in early to mid-January. And another story that we announced today, is the fact that the Department of Justice moved a bunch of Bitcoin that they were holding in a wallet due to SilkRoad, and they moved them to a Coinbase wallet, as well as several new wallets. The total amount was 49,000 Bitcoin, which is a ridiculous amount of BTC. I think it's over $1 billion or very close to it. Maybe 900 million to $1 billion, somewhere in that range. And it even included a single transfer. You logically think maybe they're doing a whole lot of, $1 million to $10 million transfers. No, one of their transfers just blatantly moved $666 million into a new address here. And that's the biggest we've seen by a large margin this year. And I think it even rivaled some of the biggest from last year. So that's something to keep in mind. It didn't have a major price impact. One could argue that prices did start to dip right after this transaction happened, but I'm not quite sure in this case it's related. It's simply, a transfer of a lot of held Bitcoin from a dormant address to Coinbase. And yeah, normally assets that move to exchanges are meant for the purpose of selling for profit. But I don't think that's so much what the Department of Justice is doing. They're transferring it to Coinbase so that they can redistribute assets to those who were impacted.
How do you even? Oh, sorry, Brian. Can you hear me? Okay now?
Yeah, you sound better.
Okay, cool. That's it's interesting. Every time I send crypto, whether Bitcoin or Ethereum or whatever, how do your hands not shake when you're pressing that when you sign that transaction with
Yeah, I
that
have no
large an
idea.
amount?
Sending anything over $1,000, I think, would impact most of us mortals. But I guess
Yeah, that's right.
I would presume they did some tester transfers and assumed all looked okay. You never know, but it boggles my mind when I see 9-figure
Yeah.
moves
Wow.
like this.
Huge.
But it's not the first time. I mean, these ones on January 5th, we documented kind of started the rally, or at least came right as like literally the hour that Bitcoin really started to power forward and start to recover back above 20K. That's when these two transfers of identical values took place on January 5th. And they totaled, I think, somewhere in the 250 to 300K range, 250 million to $300 million range, based on the prices during that time. So it's pretty crazy the amount of large transactions you see. And Sentiment's actually also working on a new top transaction model so that you can quickly get informed whenever any top transaction has occurred, uh, compared to the past 3 months of data. So it'll be a nice, efficient way for anyone who has a Sandbase Pro membership to see which of their assets they may be holding on to that suddenly just got a huge transaction. Typically, if prices are moving up and you see a huge transaction, the probability of a drop increases, and then vice versa. If prices are going down and you suddenly see a huge transaction, the probability of a rise increases. So something to consider. And we definitely welcome anyone to become a Sandbase Pro member, or even just open up a free 1 week trial. But if you decide to become a member thereafter, make sure to use code EquitiesTracker, so Andy and our friends here can receive credit for sending your great community our way.
Hey, Brian, perhaps you could show on the Sentiment platform how a subscriber could actually achieve that to get
Uh,
the alert that you mentioned.
so that's a Sand Sheets model. It would look something like this. So we have all of this data here that comes up, and it pulls the last 3 months of data for several different assets, and it compiles them every time you refresh this model right on Google Sheets. So it uses a tool known as Sand Sheets that you can download. Let's see, extensions, and then you would just go to Get Add-ons, download Sand Sheets, and then with the trial that you got, or Sandbase Pro membership, you'll receive an API key that's as good as long as your trial is, or as long as your paid membership is for. You plug in your API key, super simple, just copy paste it, and you'll instantly be able to have these kinds of formulas that are pre-made for you pop up and pull, in this case, 0x for the last 3 months, tell you the 5 largest transactions that occurred, tell you whether it was from an exchange address or not, and to an exchange address or not. And then right here, you'll be notified if a top 5 transaction occurred that day for that asset. So 0x had one on March 2nd, for example. Avgachi had one on March 6th. Adventure Gold on March 5th. Alchemix. It'll just show the last 7 days for you, so you can quickly react to some of the recent moves that have been made. And it's a pretty nifty way to take advantage of a massive whale move.
I love it. This is so cool. I mean, imagine the work that you would have had to do in order to get this table here. And with Sandsheets or with Sentiment, all that work's done for you, right? You just have to pay for the
Yeah.
membership,
Yeah,
for the
it took a
subscription.
lot of
Yeah,
time for us, but it won't take a lot of time for you, because you just pay for a membership, download it, and you're good to go.
yeah, that's amazing. Now, thanks for sharing that, Brian.
Of course, my friend. Yeah, any other thoughts you may have about the markets before we conclude? What do you expect for the next month or so as we get into the next FOMC report?
It's interesting because it seems like the Fed isn't going to slow down on inflation. I mean, on combating inflation. So, but then, yeah, I guess my take is they will keep at it until they decide to stop. And from what I've seen and what I've read, it seems like for the rest of 2023, they might be combating that. And I guess with the other external factors, like on the fronts, like with the war and the supply chain, shortage and shortage of supplies to the rest of the world. It's a supply sided inflation, if that's of that we're seeing. So I think the moment we have more peace, it doesn't disrupt the supply chain. I think that would naturally increase production for for countries, businesses, and that should ease it off once there's sufficient supply for everyone. I think right now, from what I guess what we hear, it feels like they're gonna keep pushing it. They're gonna keep combating it. Yeah, but in the meantime, I think for companies that are building, experimenting, disruptive technologies, I think they will continue to do so. They will continue to build. They will continue to push the envelope, and continue to perform their R&D. And when we come out of it, and some of these announcements are announced. I mean, for example, look at ChatGPT. Right, it's exploded in the last month or month and a half. Um, and they were quiet for the longest time until they weren't. And then it was just a sudden explosion. So it was almost like a straight line up. And I think that's what we're going to see with disruptive type technologies. That's going to change the way society functions. So crypto's in that space, I guess.
Yeah.
So let's wait and see, because I'm pretty sure all the developers are still developing. The projects are still. I mean, if they have sufficient funding, they're still building, trying to make things better.
Absolutely, Andy. Yeah, I think for sure it's going to be either a 0.25 or 0.5% rise. I don't think it goes beyond 0.5, but either way, we're starting to get around a 6% interest rate at this point here in the US. And if that's the case, it's actually quite high, and that scares a lot of people. So, um, we still have positive things coming up in crypto, like the halving. So we'll see how that interacts with what could be a very high interest rate in equities. And perhaps it even causes a bit of a correlation break, as people no longer want to be in equities when interest rates are this high, and begin to exclusively invest in crypto. And that would be a dream for a lot of crypto traders.
Yeah, that's right. Well, I think let's keep our eyes and ears on the market. Let's if you have a subscription to Sentiment, then you will definitely be able to do that easier, right? Continue to see what's happening on chain, because that usually gives very early and good indicators of what's happening. I've said this before, and I'll say it again. Crypto has the crypto on-chain metrics has brought about transparency that is unseen in the traditional stock market, like in the traditional finance world. So it brings about even more transparency. If you have the tools, you have the means, and right here we do, then you have alpha, because you have the ability to see what's actually happening, and it's transparent. It is so transparent, but you have to figure out what these metrics mean. You have to figure out what they can be interpreted to be. So it takes effort, right? So I love Sentiment as a platform. I'm a huge fan, and that's why we have you on every month, Brian, to read the tea leaves for us and tell us what's happening on chain.
Yeah, it's always a pleasure to be here, Andy. Thank you for continuing to welcome myself and the company to chat with your audience. And I'm looking forward to seeing if things start to turn around here going into early April when we talk again.
Yeah, looking forward to that. All right, so I think we're on time, and we'll keep it short and sweet. thank you for coming on, Brian. And I guess it's time for dinner for you over there.
Oh yeah, we've got a nice dinner coming, and I'll be chowing down and watching the markets here. So thank
Awesome.
you for having me on. Yeah.
Thank you, Brian. And thank you guys for tuning in. Have a
All
great
right.
day. Have a great night. Bye-bye.
Cheers, guys. Bye.